Great evening, fellow traders. This is Austin. It's Wednesday, March 15th, FOMC day, Ides of March, I think, whatever that is. Looks a lot like January outside. We're on the tail end of an epic nor'easter blizzard. Of course, you've seen that in news all over the place. If you're here in the U.S., it's national news. To us, it's just another day in paradise living in the Northeast. So, markets, trading, educational programs, few things to cover here. Start with the markets first. I don't trade FOMC sessions anymore. I used to years ago, prior to computers taking over the markets and literally becoming the markets. Computer programs are the financial markets these days. You aren't trading against me, and you aren't trading against other individuals at all. You are trading against $100 million computer programs. That's who's on the other side of all of your trades and all of my trades. We are not each other's competition, trust me. Anyhow, here's crude oil on the bottom today. Here's the S&P 500 on the top. Noticeable difference. Well, it was inventory day in crude, which at 10:30 Eastern usually creates that kind of volatility. And then you have traditionally used to have directional moves. Not so much anymore. As I've said many times, once the pit session for NYMEX went computerized, once they got rid of all the men with the open outcry, flailing arms type deal there, that whole symbol has changed. It's nothing like it used to be. It's very contracted now, very range bound most of the time. The past 3 or 4 days was trendy. It lost several dollars a barrel from highs to lows in the past few days, late last week to early this week. A lot of that was 2, 3, 4 in the morning. A lot of that was 4 or 5 o'clock in the evening, which are traditionally off hours. So that's where a lot of the movement came from. During the pit session, there were a couple of large range days, but then right back to what it has been. And this isn't to discourage anyone from trading crude oil. If you want to, by all means do so. It no longer meets my criteria of what's needed from a symbol, and those are two very important factors, and they were equally important. Liquidity being one. I absolutely have to be able to trade 20, 40, 50. It'd be nice to trade 100 contracts at a time if I want to click them in. I want to be able to click 5 contracts in and not worry about missing fills on some or unlivable slippage on some. That's an absolute must for me. It's a deal breaker. Okay, and then the second one is I want something methodical without a lot of chop. Unfortunately, in crude oil, and today was no different, you'll see that every day, this is what crude oil looks like. Chop. Do you see all these tails here on both the red and the green bars? That means at some point during this 5-minute period, it was going both directions, both directions, both directions, both directions. That's really tough to get on the correct side of trades. I'm not saying it's impossible. If you're patient and you're willing to, sit and wait for the right setups and the right sequences to come along, of course you can catch 10, 20, maybe even 30 tick moves frequently. Just can't do it on size. And in between, you're going to get stopped out quite a few times too. Okay, that's how that goes. And it is what it is. In the S&P, quiet drift into the news. And then they raised interest rates, whatever, and then that fired up, and then they wedged them, and they went up a little bit. It was a tradable day. It was tradable here in hindsight, in retrospect, but unfortunately, we can't trade hindsight in retrospect. That's worthless. All we can do is trade expectations, and my expectations for FOMC days is poor conditions, quite frankly. So I spent 4 minutes talking about what I won't do and will do and like to do and should have done and would have done. Let's talk about what I'm going to do. Let's talk about what I am doing, what's actually taking place. All right, and I've discussed this more plenty of times, and I've thrown numbers up before. I think it's important to go over numbers and data like this on a visual aspect because it kind of makes it real, or at least it makes it solid. Math is an exact science. And numbers can be, moved around or adjusted or whatever, but math is an exact science. Here's what I'm in the process of accomplishing. Not trying to accomplish, but working towards accomplishing. And as I've said, I'd be content to average 2 index points per day with the S&P, and the key word there is average. That's why it's in capitals, and that's why it's underlined. And I probably even could have made it bold and italics and shooting stars and everything else. Okay, averaged, because some days are going to be 3+ points, some days are going to be 5+ points, some days are going to be half a point, some days are going to be -2 or 3. It's never ever in the history of ever going to be +2, +2, +2, +2, +2. That's what the human mind would like. I would love that because I'm human. You would love that too. We'd all love to know exactly what we're going to accomplish and have it, be steady and guaranteed and assured and all of those things, controlled. We'd love that. It's not how trading works, just like any other personal performance pursuit. But what we can do is shoot for 10 or greater S&P points per week. And with that kind of goal, what it does, it takes away the daily pressure. It does many things. First of all, here's one thing it does. If a day is generally crap, if you'll forgive that euphemism, then we don't feel compelled to trade it. And if we miss out on a day, then we don't have that guilt of remorse. If your mentality is, I've got to maximize every possible dollar I can get from the market and so on and so forth, and I have to be there every day because I'm a day trader, then you'll feel guilty about taking vacations. You'll feel guilty about sitting out FOMC events or half holiday sessions or anything else. You will feel obligated, self-pressured, to sit there during what part of your mind thinks is par conditions, and in retrospect, a lot of them will be, and then part of your mind will guilt you into sitting there, and you will be in a constant mental struggle. Matter of fact, most of you, and that includes anyone who's been around for a while, has already experienced that. Most of you have experienced that just like I have. You've sat down in a day and you're like, well, this day is probably not going to be very good, but there's the eraser word. I don't want to miss anything because I'd feel terrible if I miss something. So then you sit there and you take a few trades and you get chopped up, and you take a few trades and you get chopped up, and then you're frustrated with half of yourself. The half that said you shouldn't have traded. But then there's the other half, right? The other voice on the other side of greed saying, well, at least now you know. Now you know there was no potential there. Now that you lost money. Now that you sat there and worked so hard to lose. Okay? And that's all part of the emotional struggle. But it doesn't have to be. Okay? And you can turn it, because when your objective is performance every single day, you feel compelled to do that. However, when your performance matrix is, hey, all I have to do is average a minimum of 10 S&P points per week. If I get more, that's a bonus. If I get more, that's just icing on the cake. But it's not necessary. It's not meaningful. It's a bonus. Right? And then, with that in mind, if all we do is average 10 S&P points per week, and that's $50 a contract, then we have averaged $500 a contract. Okay, now I understand you're not going to quit your job, most likely, to make $500 a week from trading gross, and then you have costs and taxes and expenses and whatever else you do in life. Most likely you're not going to do that. Most likely you're not going to be a full-time trader with one contract for the rest of your career. But with some symbols you would have to be. They don't allow size to be traded. Fortunately, the S&P does. And so, by and by, you keep this process going, and eventually you're trading 5 contracts. And you're averaging $500 per contract a week. Now, you have the potential to average $2,500 a week. You might quit your job once you're accomplishing that. Okay, a little while longer, 10 contracts times $500 per contract. Average gains, $5,000 a week. Maybe that's a career decision. Same thing with 20 contracts, same thing with 50. Unlike most other futures symbols, with few exceptions, those few being 10-year note and 30-year bond in the U.S. debt market and the S&P, there are not any other futures contracts symbols I can think of that you can consistently trade 20 to 50 contracts in and not experience hellacious slippage, partial fills constantly, and all that kind of thing. It's just not possible, right? And so, like I said, that's one of the 2 criteria for me, because if I'm going to trade, if I'm going to spend time trading, I'm going to do it to the best of my ability. I'm going to max out whatever potential there is, whether that's for personal gain, whether that's for, some type of commercial managed accounts or whatever the case may be. I don't have zero intentions of sitting the next 10, 15, 20 years of my life in front of screens with one or two contracts, make a few $100s a week. And I'll tell you right now, not me, not you, and not any other human being on the face of the earth can take one or two contracts and make tons of money with any symbol. That's flat impossible. It's never been possible, and in this day and age, it's less possible than ever. Okay, so you have to be able to trade multiple contracts if you're going to make anything happen. So obviously you want to specialize in something that can handle multiple contracts. The S&P can. And if we put numbers to those numbers, that's what it looks like on a 52-week annualized basis. Now, first of all, I have no intentions of trading 52 weeks a year. I would prefer to trade like 40. Okay, somewhere between 40 and 48. I damn sure am not going to trade 52 weeks. I'm taking the week of Christmas to New Year's off. I'm definitely taking the last 2 weeks of August off. I might take some others, probably the first week of May. I like to take that off for turkey hunting. That takes me to, say, 48 weeks or whatever. So these numbers aren't mine. I don't own these. I'm just showing you. We're just discussing what a 52-week annualized balance would be if we accomplish this. Now, I left out the $500 per week because obviously that's $25,000 a year. Okay, we can all do the simple math. If we get to 5 contracts and 10 and 20 and 50, right? This is just, again, 10 index points per week, $500 per contract. We're adding up contracts. Look what you got. 130,000, $250,000, $500,000, million plus gross. That's all you're accomplishing. So does it matter if you take a day off here and there? Does it matter if you take an entire week off? Does any of that matter? No. What matters? It matters that we average 10 points a week or more. So if you just maximize your time during the good times and you pick off 2 points here and 5 points there and 4 of the others and so on and so forth, that's what we're accomplishing. This is my goal. The educational side. I'm sending out my very last email notification ever here tonight, and that's just me. I have an email list. It's of a number of people who've been active participants through the years, and this is the final one. After that, I'm just gonna. I have it in an Excel spreadsheet. I'm just gonna delete it, be done with it, never send an email out again. And a couple reasons for that. Number one, I think everyone by now has heard enough from me. They know who I am and where I'm at and so on. And number two, I don't want to make it seem like I'm chasing people. I don't pursue people for the educational side here. I mean, if somebody wants to be part of it, that's great, and if they don't, they don't. I'm not in the pressure or persuasion or convincing business at all. I'm in the educational business. If somebody's an active trader and they want to learn how to do this, I'll show them how to do it. I'll show them how I'm doing it, and I'll show them how it's done with whatever symbol. Not necessarily this math. Of course, I will with the S&P in either the live mode or home study. But if somebody wants to learn the nuances of trading, whatever, I'll walk them through that with whatever it is. Okay, and we're in 2 modes now with the educational aspect. The first mode is Home Study Interactive, and that is we start out the same way. We have the basic videos and then some continuation videos, and we have the customized chart tools that we use, things like that. And in addition, I'm going to feature on a weekly basis, break down a couple of days. Okay, here's how I traded it. Here's what I saw. This is what I did, so on and so forth. And for the members who are part of that, if they want to see something else, all they have to do is, it's going to be interactive where they can post comments and ask questions and so on in a controlled fashion. I will screen all of the feeds before I get them to make sure it's content specific, to make sure somebody's not cross-recruiting other methods or talking about this stuff, that stuff, and other stuff. Okay? So we will keep it on topic. We'll keep it focused, and the members of this new service will say, I want to look at the Euro. I want to look at NASDAQ 100 or the Russell or whatever the case may be, FX. great. And then we'll profile that for them and get some conversation and dialogue going. So I'm taking the what used to be just a very static, basic home study course, dynamic. It's going to be interactive and two-way exchange. And it's a new service. Nobody's grandfathered in. All right, and there are a number of people who have access to the existing home study course, and that's not going to change. You can still have access to that, and it's static the way it is, and nothing's going to change there. But for the new enhanced service, the two-way interaction and so on, if somebody wants to be part of that, that's a completely different thing. All right, and I look forward to working with people in there, and that probably targets the majority of traders these days. What I hear most is from traders, I don't have time to be in front of the screens all day. My work schedule, career schedule, life schedule doesn't permit that, so on and so forth. And that's great. I understand. And so with that in mind, we will do the end day interactive thing, and that works for most people. For the traders who have time during the day, who are serious active traders, and they want to just be right in their hands on trading the S&P virtually with me, because that's all I trade. That's all I'm interested in trading. So if they want to follow along and they want to see how the S&P is traded in live fashion, then we have that. And both of these services, by the way, come with some money-back guarantees. As far as the live mentoring goes, there's some performance guarantees. You and I are going to be trading the S&P live, right there in front of our eyes. And so there's minimum performance guarantees that I'm assuring you, if I don't hit those, you're welcome to, refund, things like that. So this is a two-way street here. It's an enhanced service, and the daily live interactive is just for a few select people who are really serious about trading right now, who are trading, serious about making it happen right now and doing it in the trenches right now. That's who it's for. I no longer run just an open live room type of deal where people can come and go as they please, and whatever, that type of thing. I don't do that anymore. I'm sure there's other services out there that will offer that to the people who are looking. That's not what I do. If I'm going to work with someone on a live intraday basis and dedicate my time to it, I'm going to give them everything I have as far as a personal experience, and it's going to be worth my while. Quite frankly, it's going to be an even exchange, two-way street. The quality and the information and the service will be there. And, what more can I say? Very personalized. As far as the end day interactive, well, that's open to anyone. Anyone who wants to join that from this point forward can jump right in, ask questions, make comments, ask for whatever it is that they want to see, specialize. I don't care what it is, corn or soybeans, different commodities, Forex, bonds, different stock indexes, crude oil. We'll cover it all, okay? We'll take all comers, like Muhammad Ali used to say. We'll duck no symbol. So that's what we have going on. This is what I'm working my way towards, whether it's in personal aspect or commercial aspect, institutional trading, whatever the case may be. It's that simple for me. Not any single day matters. The only thing that matters is sit, watch, and wait. Take the clear, confirmed setups. Hit that 10-point or greater average as many weeks as possible. Keep adding contract size, and let math take over. Because remember, math is an exact science. It does not lie. If you can make any of those digits on the left-hand columns work, then the right-hand results are natural. That's a natural result from there. You cannot stop those results from happening if you can manage the left side of those columns. That's what we're all about. Hope this helps. Look forward to working with you inside, and as always, best trading wishes.